Have you ever kept a big chunk of money in saving account just because you didn't know where else to park it safely for a few months? Or maybe you were told fixed deposit are the only safe option for short-term funds. Well, what if I tell you there's a smarter, more flexible option that gives better return than your saving account without locking up your money? Hey everyone, I'm Sahil, and in today's video we are going to talk about one of the most underrated tools in personal finance, that is liquid funds. These are ideal for your short-term goals, emergency funds, or even when you want to invest a lump sum into equity but slowly. And yet, most people either don't know about liquid funds or they don't fully understand how they work. So by the end of this video, you will know what exactly are liquid funds, then why are they called liquid, next how much return do liquid funds generate, then when should you use a liquid fund, then are liquid funds safe, next how are liquid funds taxed, then how do you pick a good liquid fund? Towards the end, there's a very important criteria on liquid funds that you must check before investing in them. So watch this video till the end. Alright, let's get started. Let's start with the basics. Liquid funds are a category of debt mutual funds. Unlike equity mutual fund that invest in stock market, your debt mutual funds lend your money to borrowers. That include usually the corporates, government bodies, or financial institution. Now, liquid funds invest in short-term debt instruments, that is, instruments that mature in 91 days or less. These instruments include things like treasury bill, which is issued by government, then commercial paper that are issued by corporates, then certificate of deposit that are issued by banks, and then call money, which is an overnight lending between banks. Because of these short duration and high quality borrowers, the risk in liquid fund is very low as compared to other mutual funds. So in simple terms, a liquid fund lends your money for a short duration to safe institution and earns a return. And you get that return as the fund grows. Now let's discuss why liquid funds are called liquid. So the term liquid refers to how quickly and easily you can access your money. In a saving account, your money is available 24/7. In fixed deposit, you may have to pay a penalty for premature withdrawal. But in liquid funds, you can redeem your money within one working day. And some mutual funds even offer instant redemption up to a certain amount, usually let's say 50,000 per day. So yes, it's almost as liquid as saving account, but with slightly better returns. Now let's discuss how much return does liquid fund generate. So liquid fund returns fluctuate based on interest rate environment. But on an average, liquid fund offers 6 to 7% annual return, which is pre-tax. On the screen, you can see the top performing liquid fund in last 1 year. That include Canara Robeco Liquid Fund that has generated 7.3% return. Second top performer is Axis Liquid Fund with similar returns. It is followed with Aditya Birla, then PGIM Liquid Fund. So while liquid funds won't make you rich, they beat your saving account return, which is typically in the range of 2.5 to 4%. Now let's discuss when should you use a liquid fund. So liquid funds are not long-term investments. They are meant for short-term goals or temporary parking of your funds. What are some of the common use cases of liquid funds? So let's say you just sold a stock or mutual fund and don't want to reinvest that money immediately. In that case, liquid fund can be a great option. Next very important use case could be you are building an emergency fund. Then another use case could be you have a lump sum amount but want to invest it slowly in equity. Let's say you received a bonus or lump sum amount and want to invest in equity. Now instead of putting your money all in one go in equity and risking market timing, you can actually park that money in liquid fund and use systematic transfer plan, that is STP, to move a fixed amount every week or month to equity mutual fund. This is like doing SIP but from a liquid fund, not from your bank. It basically reduces timing risk and lets your parked money earn a decent return in the meantime. Then another use case could be you are saving for an expense which is 3 to 6 months away. Like it could be tuition fee, travel, or home renovation, or you are keeping money aside for future SIP. Basically, any money you don't need immediately but also don't want to risk. That's where liquid fund could be a great option. Now let's discuss, are liquid funds safe? Now this is the most important question. And the answer is, liquid funds are one of the safest mutual fund category, but that does not mean zero risk. There are mainly three risks with debt mutual fund. First is credit risk. It means the borrower does not pay back. Now in liquid funds, this is a very low risk because fund managers usually lend only to high rated borrowers that have AAA or A1 plus rating. Second is interest rate risk. So longer term bonds fall in value when interest rates rise. But since liquid fund lends for very short duration, which is 91 days, so even this risk is minimal. Then third risk is default events. While rare, a few liquid funds have faced issues in the past when they lend to lower rated companies to earn extra return. Hence, always choose liquid funds from trusted AMCs with a conservative investment strategy. Now let's discuss how are liquid funds taxed. Now if you sell your liquid fund within 3 years, then any gains are considered short-term capital gain. These are added to your income and taxed as per your income slab, just like your FD interest. So if you are in 30% tax bracket, your post-tax return could reduce. But still, even after that, the returns from liquid fund are generally better than saving account, especially if you hold your money for more than 3 months. Also, liquid funds don't have TDS like FDs, so you get more control over taxation. Now the final question, how to pick a good liquid fund? To identify a good liquid fund, you can follow 3 steps. First step is evaluate 1 year return. Since you will not put your money for a longer period in liquid fund, try to look at last 1 year returns. For instance, if you look at best performing liquid fund in last 1 year, top performance is from Canara Robeco liquid fund that has generated 7.3% return. Second top performer is Axis liquid fund with similar returns. It is followed with Aditya Birla, then PGIM liquid fund. Then step 2 is to look at expense ratio. Expense ratio is the fee charged to manage your funds. So try to identify funds with lower expense ratio. For instance, Canara Robeco has an expense ratio of 0.08, then Axis liquid fund has an expense ratio of 0.12. Aditya Birla expense ratio is at higher side at 0.21. Then third step is check the AUM, that is asset under management. Try to shortlist funds that have decent AUM size. Avoid funds that have very low AUM because that shows fund does not have a long history. So here some of the decently sized AUM include Axis, then Aditya Birla has good AUM size but its expense ratio is on higher side. Then Mirai liquid fund is also good with decent AUM size. Expense ratio is also nominal and returns are also good. Finally, combine all 3 criteria, that is 1 year return, then expense ratio and AUM size. By prioritizing expense ratio and short-term return, you are optimizing for cost effectiveness and recent performance. Based on this, I think Axis liquid fund is a good choice that has a decent AUM, low expense ratio and one of the best returns in the category. Now last very important aspect is to check the portfolio composition and credit quality. Usually good liquid funds should have AAA rated or A1 plus rated instruments in their portfolio. For instance, if you look at Axis liquid fund, all their top holdings are either rated A1 plus, which is the top rating, or they are sovereign, that is government bonds. So the portfolio composition of Axis liquid fund is top notch with highest credit quality instruments. To wrap it up, liquid funds are better than saving accounts, safer than most mutual funds and more flexible than fixed deposit. They won't make you rich, but they are perfect for emergency funds, short-term goals, temporary parking or gradual equity investing via STPs. If you are serious about managing your money smartly, then don't let your cash lie idle. Put it to work smartly and safely. If this video helped you understand liquid funds better, do hit the like button and subscribe to the channel for more content around personal finance and investing. And share this video with someone who needs to know about liquid funds. I'll see you next video. Till then, take care.